Good morning, everyone. Once again, this is Black Forest coming to you with another market analysis currency breakdown video. This morning, we're going to be looking at the Euro USD. But before we get started to break down this currency pair in this chart, we have to say that this video is for educational purposes only. This is not financial advice, okay? So, with that said, we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and to help put a little bit of extra money in your pocket, especially during these, hard economic times. Okay. Here at Black Forest, we'll take care of that hard work for you. All you have to do is watch the video, apply the information, and go ahead and make your money. Because trading is complicatedly simple. We'll take care of the complicated part. And all you have to do is the simple part, which is make the money. All that we ask is that you please like and subscribe to videos. The liking gives traction to our content. And also the subscribing will allow you to be able to get notifications of every time we drop new market analysis videos, or we will drop videos that will be affecting the Forex markets. Okay. So with that being said, let us discuss what is happening with the euro and the USD respectively before we get into the technical analysis. Okay. So the euro, from an economic news standpoint, has had just as much negative news has come out about it, and just as much positive news has come out about it. So it's almost like right there in the middle. But the thing that's pushing it towards the weaker side is basically the entire destabilization of the European continent's economy from the Russia-Ukrainian war, and also from the reverse ripple effect that's happening with the sanctions. Because every time the American government or the entire EU place sanctions against the Russians, it has a negative effect on the euro's currency strength. Okay, so the reason why that is because Russia is, from a land standpoint, is one of the largest nations in the world. Okay, and if it has, being that it has a large nation, it has a lot of raw goods. Majority of these raw goods are brought by the Western European countries, which makes up majority of the EU. So the majority of the Western European countries buy Russia's raw goods to make consumer goods for their citizens in their countries. Okay, so when they place sanctions on Russia's raw goods, this means that they're not buying the Russian raw goods, or will allow businesses in the countries to buy these raw goods. Okay, so if they can't buy the raw goods from Russia, then they have to get these raw goods elsewhere, from like Africa and the Middle East, which means that there is going to be high import and export and tariff charges to ship these raw goods to them. And in turn, they take these high charges and offset them by raising the price on consumer goods, which leads to further inflation. And the inflation is also being further catalyzed by high oil prices. Okay. So, and then also there's just a lot of destabilization with the entire European continent's economy due to Russia and Ukraine fighting. So eventually, what's going to happen is we're going to lead to a food shortage, is because a lot of the world's wheat come out of Russia and Ukraine, respectively, and if both these countries are concentrating on trying to defeat one another, then they're not going to have people that's going to be able to go work the fields to get this wheat to ship it out to the world. So eventually, we're going to have a food shortage as well from this conflict, which is going to further devastate the European continent's economy as a whole. Okay. So no matter how good the news is that comes out for the euro, we are still going to be dealing in a situation in which we're still going to be dealing in a situation in which the until this war is resolved, and then they can take care of these economic woes that was brought on by geopolitical policies. We're going to see a continuation of the major three European continents currencies, which is the euro, the CHF, and the British pound. Okay. Now let us discuss what's happening with the USD. The USD has been performing as one of our stronger currencies going into the beginning of this trading week. We had some negative news come out about the USD during the during the prior trading week, but we have a lot more good news and negative news come out about the USD. Okay, and then on the latter part of the trading week, we did have news come out about the initial jobless claims, in which that the number that actually came out was better than it was previously. And it was also better than the number that they predicted it was going to be. So that means the USD is very strong and remains one of our stronger currencies going into this trading week. Okay. And also, we're seeing a drop in oil prices as well, which is having a non traditional effect on the USD, in which as long as oil keeps going down, gas prices go down and the USD gets stronger. Now, if you want a clarification on that non-traditional relationship, I strongly advise you to watch our USD CAD market analysis video. We get into a lot of detail about that. Okay. Now, with all that information said, let us discuss what is now physically happening on the chart. Okay, so as we can see, we were ranging for a little bit, with this part being the upper part of our range, this section here being the lower part of our range, this area here being the upper extremity, and this area here being the lower extremity. Okay, so as we can see, due to weakening of the euro and the gaining of the strength of the USD, price dropped all the way to our lower extremity. And now we're starting to pick up some, but this pickup is not as aggressive as it did last time. So these are telltale breadcrumbs that we're seeing on a chart that price is going to continue to actually slide down. Okay, so what may happen is that we may range out from this area here, go down. We may push up to here or even possibly here before we range out and continue to go down. Okay, so let's go over that one more time. We're going to range out here, okay, before we go down, or we can range out here, have a pathetic push up to either here or here before we start to go down. Okay. I hope that information was helpful for you guys. Happy trading.